With changes in the stock market almost daily, investors are looking for certainty. And while not guaranteed, dividends can provide some level of consistency for your portfolio. So what are the best dividend stocks right now, especially considering what is going on so far in 2025? Let's go ahead and break it down. Before we get into this list, like always, especially in a time like this, with all the tariffs and all the chaos, you need to know how this particular dividend list is different and why my lists are always a bit different, all right? What I am doing when I come up with these lists is I always consider what's going on right in the market, but I'm looking for good performers, meaning I want a stock. More importantly, I want a stock that is doing well. So whatever stock, ABC Corporation, whatever, it needs to make 10, 15, 20%, whatever. I want the stock to do well, and I want it to pay a dividend. What other people do, other channels, other articles, they'll say, oh, it's paying a 5% dividend, a 6% dividend, but not pay attention to whether the stock is doing well. For example, and I'm just pulling an example out there, let's just say ABC Corp again. It'll pay a 5% dividend, but the stock will be down $30. That doesn't help you. You lost money. Sure, you get a consistent $5 check, but the asset that you hold, the stock, it keeps losing money. If you were to sell that stock, you would have lost money. So when the stock market is choppy like it is right now, or the stock market continues to fall, what good is it? Yeah, you got, your app lights up and you get a little $5 deposit, but the stock is still down. That doesn't help you. What I am looking to do is get a good stock and it pays a dividend. All right. So these dividends aren't going to be double digits, but the returns have been. And if these, if the past does predict the future, which it does not, but it might rhyme, that's what we're looking for, then that's what we're looking for. Okay? All right. I think only one of these we've talked about before. So there's only going to be one repeat here. And Walmart is not on this list. All right. That's a hint for you. The first one here is eBay. Yes, that eBay. eBay is up 14% in the last 6 months and up 41% in the last year at the time that we are recording. Okay, I want performance. You got to do well to start on the list. So that's why I'm starting with the performance. Now, eBay pays a 1.56% dividend, which was surprising. I wouldn't expect them to pay a dividend at all. Why is eBay on the list? Other than the fact that it's doing well and other than the fact that it pays an okay dividend. It is this. In a time where we expect prices to rise at the end of this month and moving into June, we'll see if that's going to be the case. Tariffs could continuously pause or be renegotiated or whatever. We're going to see. But what do you expect consumers to do? We expect consumers to continue to go to Walmart's, Dollar Trees, things like that, which we've already talked about, and we've already talked about whether or not those are going to be good stocks. If you don't know, check out this video here. All right. Other than that, though, where else would you shop for things or buy things that you need, but you don't want to pay top dollar? eBay might be one of those places. So I would expect them to get more traffic and to continue to do well, again, in a space like this. The fact that it does pay a solid dividend on top of that, I think could be advantageous and something you may want to continue to do research into. Next here is Kroger. This is the stock we have talked about before. They pay a 1.72% dividend. I'm not going in any particular order here, by the way. Kroger is up 26% in the last 6 months and up 32% over the last year. This one is a bit more obvious, at least I think is a bit more obvious. They are much more of a defensive company. I say more obvious because, again, you have to shop to get groceries. And I would air quotes tariff resistant because, yes, avocados are something that they're much more likely to get hit by tariffs. However, the majority of what Kroger sells, unlike a Walmart, because Walmart sells everything, right? Toys, for example. The vast majority of toys and electronics, too, are made elsewhere and shipped here, meaning a lot of that stuff is going to get tariffed, a lot of that stuff is going to have higher prices. Well, Kroger doesn't necessarily have the exact same issue. There, again, avocados and other items, yes. However, the majority of our food is produced here in the U.S. You don't ship food super long distances in many cases. Not all, but many. So we have an overabundance of food, and we are a net exporter of most foods here in the U.S. So Kroger might be fine. right? They may not have the exact same issues with tariffs as others. And I think that's one reason why they may be standing out a bit more. Your financial situation can get quite complex. And no, I'm not just talking about your investments, your debt, your taxes, your budget. I mean, when was the last time you looked at your life insurance portfolio and decided whether or not you have had enough coverage? All of these things can be quite overwhelming unless you get some help. And that's why I've partnered with Wealthmore. Think of them like Peloton, but for your money. On the app, you can join one of their free advisor-led communities where they're focused on things like investing, retirement, home ownership, and more. Or for as little as $25 a month, you can talk to or message a wealth advisor at any time. You can download the Wealthmore app and find me on the app as well right now. Download Wealthmore and use the code BuildingBread today. A surprising stock here, but they don't have the best dividend, but they may continue to do well here. And that's Visa. And Visa is not a company we talk about too much. You can also not just Visa for the dividend, but Visa for, so let's start here. Visa up 13%, up 24% over the last year. Now the dividend is only 0.64%. There aren't a whole bunch of dividend stocks, honestly, that hit this criteria up double digits plus a dividend. So Visa's there, but Discover is one that you may want to check out as well. And you guys know how I have felt in the past about American Express. Now those two did not make the cut today, but if I'm looking at Visa, I would also just investigate those other two and see which of the three you like. Okay, but today Visa was the one that made the cut. In my memory, I don't think American Express pays a dividend, but I could be wrong. Investigate those three, see which one makes the most sense for you. But today, Visa was the one that made the cut. We'll see how transaction volumes, meaning how many times people swipe a card, and how much money they make from this point forward. That is something I would look at. Because that's something that would impact them, right? Are people going to spend at the exact same rate? Is that going to reduce as people pull back? I don't know, right? That's something that I would take a look at for Visa. Next here is an energy corporation, which I had to throw energy in here somewhere. Now, EXE, again, is the stock symbol here. They are based out of Oklahoma City, which is close to my home in Tulsa. And they pay a 2.12% dividend, the highest one on the list at this point, up 25% in the last 6 months and up 52% over the last year. They're in the oil and gas business. I've talked many times about why I think energy as a whole, not just oil and gas, but whether it's, solar, electric, even utilities like water and things like that, they are an important spot that may be consistent and reliable. I say reliable as much as the stock market can be reliable, and relatively tariff resistant, because y'all saw my reaction on how I thought Netflix was going to be tariff resistant, and then somehow movies got a tariff on it. So there you go. That's all I can say. But in most cases, you would expect, though there are some energy companies that do kind of go back and forth with Canada, but there are some that don't. They're all domestic. But in either case, that is something that may warrant your attention. NRG may also qualify for this one, and there are many others. So if you don't have at least one energy company in your portfolio, take a look. Take a look, see if it makes sense for you. If you want to know other stocks that you may want to pay attention to, whether pay a dividend or not, check out this video right here.